This is the one thing that has given me so much frickin' pain. But I must, on some level, like taking pain because I just keep coming back for more. The story of Bitcoin Treasury Company started back in 2020 when Michael Saylor from MicroStrategy realized, hey, this money in my treasury is a melting ice cube. I want to say thank you to the nearly 100 people that have subscribed to receive updates on that challenge. That is wild. I'm a little bit nervous, but I guarantee you it's going to be entertaining, win, lose or draw. The most important thing with investing, and especially options, I think investing is highly personal. You want to use all the tools like options, etc. to complement this computer of yours. One of my biggest positions, my third biggest position, is this strike that's offering me a 8% coupon that's paid quarterly, and it is appreciating in value. What I like to do is I start by having a position so that I'm involved. You do not want to be high and dry. When opportunities come, Woodside position is outperformed Bitcoin in the last 3 months. And so there are going to be winners and losers in this strategy. I honestly believe that AI is going to usher in the first $1 billion one-person company. Do I think that it's going to be the end of civilization? Do I think that we're all going to be sitting at home doing nothing? All right, what is up, guys? Welcome to another episode of Money, Markets, and Mayhem. This week, I'm going to give an update on the trading challenge, where that's at, and when you're going to start seeing some trades from me. I want to say thank you to the nearly 100 people that have subscribed to receive updates on that challenge. That is wild. I had no idea that we'd have so much interest. It's really interesting because going back and looking at the 8 or so episodes that were released, the ones that seem to get the highest number of views and engagement are the real long form educational pieces. So the one that we did on the Lynn Alden talk got 6,000 views. I cannot believe it, guys. We've only got here something like 650 subscribers, and I'm actually blown away that we've doubled our subscriber count in the last 4 weeks as well. But 6,000 views from that number of subscribers is huge. Really amazing to see where the subscribers are coming from as well. There's about 45% coming from the AU. There's about 25 to 30% coming from the US. And we've even got people from Europe, UK, and New Zealand tuning in to Money, Markets, and Mayhem. So I'm like over the moon with how the channel is going so far. But what is interesting is to see that those episodes where we do the long form macro explanations of what's going on, bigger picture, seem to be getting the most amount of views and most amount of engagement, right? We've got a few that have been in the thousands. There's, the one that I did about going from real estate into macro had over 3,500 views. The one they did about Warren Buffett's silent warning on the dollar, 2,500 views. And we did one on the monetary regime shift that had about 1.2k views. And then Lynn Alden's had 6k views. The ones that we've done on trading have been a little bit lighter on views, but still heavy on engagement. So the fact that we were to get nearly 100 subscribers to the newsletter and nearly 100 people who want to be kept updated with my trades and how we take on that 10k challenge, that is wild to me. That is wild. I'm a little bit nervous, but I guarantee you it's going to be entertaining. Win, lose or draw, we're going to try and make it as entertaining and as educational as possible. Again, as always, none of this is financial advice. Anyway, today's episode, you can see that I'm coming to you from Melbourne, and it looks a little bit different. All right, guys, I am filming this week's episode from Melbourne, and I just wanted to show you guys my cheeky setup that I've had to... Oh, this is just high tech. This is tech at its best. This is professionalism at its best to get this set up. I'm at the workspace in South Yarra because I'm in Melbourne this weekend, and you can just see it. In order to get the rule of third or to get me in the screen where you guys need me, this is what I've had to do. So I hope you enjoy this one. We've got a theme song for the podcast. So I've had an AI artist create a theme song for the podcast. And if you listen to me or follow me on IG, you might have heard some sneaky snippets of it. So either this week or next week, you're going to hear that song as well in the intro. All right, so today, what are we going to do? We're going to give a couple of trade updates. I'm going to talk to you about some of my positions, where they're at. We're going to give an update on the trading challenge, and we're also going to go through and answer a bunch of the most popular questions that I've been receiving on these episodes since we launched. I'm getting inundated with questions on Instagram. And honestly, I don't spend that much time on Instagram. Like, I'll post and I'll reshare some of the stuff that Unemployable posts. And, it's been incredible to see the following on IG grow. And I'm even seeing some of you guys starting to come and follow me on X, where I put some more meaty trade stuff over there. And that's been awesome. But I just can't keep up with the amount of questions that I'm receiving. But I am going to try and commit to answering all of the most frequently asked questions that are getting thrown in the comments of these videos. So today, that's what I wanted to get started on. I want to get started on answering some of the questions that you guys have been asking, because I know that the success of this channel is going to be on how well we can educate you guys and bring you up to speed on the things that you kind of need to know to be ready to play the game of macro. So without further ado, let's get into the questions. One of the questions that I get asked often from friends and from you guys in the comments is, can we see more info on the treasury companies, the Bitcoin treasury companies, that is. So that is something that's really, really interesting to me at the moment. It's probably a topic that deserves its own episode, deep dive. What is a treasury company? How do they fund their Bitcoin purchases? How many treasury companies are there? I have all that information, and I've been following that, and I've been watching as the new treasury companies come onto the market. So I will do a deep dive on that if you guys want to see it. But just a basic overview of what a Bitcoin treasury company is today and where I would go to seek further information. So the story of Bitcoin treasury companies started back in 2020 when Michael Saylor from MicroStrategy, now known as just Strategy, took the $500 million that he had on his balance sheet that his company had built over time. They're a minor competitor to Microsoft. That's basically what these guys do. They offer software services. And with the whole mess of 2020 and COVID, Michael Saylor realized, hey, this money in my treasury is a melting ice cube, and I need to find a place to put it in order to ensure that we compound this money over time. And basically, to cut a long story short, Michael had looked at everything. He'd looked at acquiring new companies. He'd looked at everything he could do to increase the efficiency and effectiveness of his operating company. He considered gold. And after all of this research, he basically decided that the best place to put his money was in Bitcoin. Now, I'm going to throw it up on the screen, but Michael Saylor just did an interview or podcast with Jordan Peterson, who I'm sure many of you know. And this is well worth a watch because Jordan Peterson gets into the psyche and the mindset behind why Michael Saylor made these decisions. So we all know Michael Saylor is a fast talker. We all know he's a good salesman. We all know that he must be some kind of good businessman to have $1 billion net wealth and a company listed on the stock exchange. And we all know that he's a good investor. He made $200 million investing in Apple and many of the names that you see in the Mag 7, all right, back in 2008. He invested 20 mil, turned it into 200 million. But what you don't know is the motivations behind why he's doing the things he's doing. So this podcast was an awesome one to check out. We'll throw it up. Jordan Peterson, Michael Saylor. Anyway, back in 2020, he decided to put $500 million on his balance sheet. He convinced his board because he's a majority shareholder. And then since then, he realized that many more people became interested in MicroStrategies. They started buying MicroStrategy because they wanted him to go out there and fulfill this mission. As many people were buying MicroStrategy, the value of MicroStrategy versus his Bitcoin holdings started to grow. So then Michael Saylor started to basically sell his stock in order to buy more Bitcoin. And then recently, in the last 12 months, he started taking out debt. So he started basically offering the market debt at really attractive terms to MicroStrategy. Basically, their debt now they've gotten their debt to a point now where it's unencumbered. They're offering like 0% interest rates or near 0% interest rates. People are lending them the money, right? And then they're going out and they're buying Bitcoin with this money and they're increasing their Bitcoin per share. Some of the questions I had, which I've done a deep dive into, is why are people lending MicroStrategy money at these terms? And the short answer is that there's a lot of people out there that have a mandate to buy debt instruments, right? And this goes into the whole what is bonds thing, which is another question that a lot of people are asking about. And a lot of these companies have mandates to buy fixed income, to buy bonds of companies that they believe aren't going to go bankrupt, right? And because a bond can appreciate over time. So with all this demand in this income, these debt instruments, that is quite clunky to do, to like go and raise a billion or $2 billion, he realized, hey, I can create securities, and recently he's created securities that are called Strike, Strife, and Stride, and the tickers for those are STRK, STRF, and STRD. And basically, those instruments offer a coupon of between 8 and 12%, and people are now buying those on the stock exchange. They're buying those for that coupon, for that dividend, and as more and more people buy them and the demand increases for them, the price of them goes up and the coupon goes down, which is how bonds work, right? If you buy a bond at par and more people buy the bond, the demand for the bond increases, then the coupon will actually come down. If the demand for that bond decreases, the value of the bond will come down and the coupon, the interest payment, will go up on newly issued bonds. So this is something that's really interesting. He's basically creating these whole new financial products, and he's putting instruments that were previously only purchased by professional traders or institutions. He's now putting those in the hands of retail investors to be able to buy. My second or third largest position is one of those instruments, Strike, right, for MSTR, that is backed by Bitcoin. So for every dollar he issues, it's backed by $6 worth of Bitcoin. And so those instruments are now ahead or of higher preference in the MicroStrategy capital stack than the MicroStrategy common stock. And so if there's ever a call on those instruments, the bondholders are going to get paid out first before the common equity holders. So anyway, one of my biggest positions, my third biggest position, is this Strike, because it's offering me a 8% coupon that's paid quarterly, and it is appreciating in value. So I purchased it at about $91, $93. Now it's valued at about $104. So I've made capital appreciation on that. And there's also a convertible option on the Strike that if my MSTR goes over $1,000, that you are able to convert your Strike for MSTR at 10 to 1. So 10 shares of Strike for 1 share of MSTR. So there's a conversion option on it as well. So these things are really, really interesting. The concept and everything that I've probably explained so far probably sounds really, really wonky. And it took me weeks and weeks and weeks to understand. But here's what I do. I'm going to give you guys a little bit of homework if you want to understand more about what is going on here. Because now what's happening is companies all over the world have started following this strategy from MicroStrategy. There's a company in Japan called Metaplanet who's now doing it, and their stock has like 10x'd in like no time, and there's more and more companies that are popping up in the USA that are doing the same thing, right? Or having a different spin, but basically the end goal is to purchase and acquire more Bitcoin than as much Bitcoin as possible. Couple of key points. I don't think all of these companies are going to make it, right? Because it does involve taking out leverage, and so there are going to be winners and losers in this strategy, I believe, right? At the moment, the ones that I'm kind of most interested in learning about and the ones that I have a position in are as follows. So I have a position in MicroStrategy, I have a position in Strike, Strife, and Stride, which are their bonds. I have a position in Metaplanet, which is on the Japanese stock exchange, and I have a position in Semler Scientific, right, which is a smaller company that's trying to do something similar. This is not financial advice, and I don't recommend you go out and you buy these companies. But what I like to do is I start by having a position so that I'm involved. If I see a stock running and the technicals look good, which these three companies don't look too bad, some better than others, some worse than others. Won't go into detail today. But I take a position, a small position, and then I start learning. That forces me and motivates me to learn the things that I need to know to understand what drives the price. So I took a position in MSTR and I started learning about it. I took a position in Strike, started learning about it. I just recently took a position in Metaplanet, and now I'm all over Metaplanet and learning about Metaplanet. And as my conviction increases through that research, then I go and invest or make that position larger, right? So that's how I'd be handling it. And the one company that I'm most interested in that I don't currently own is 21, and that's with Jack Mollers, Cantor Equity, Howard Lucknick, Commerce Secretary. And at the moment, that's in a SPAC process. Look up SPAC, put it in ChatGPT if you don't understand it, SPAC. And eventually there's going to be a merger, and that's going to be called 21. It'll have the ticker XXI or whatever the Roman numerals for 21 is. So I'm also interested in that. Some of the concepts that you need to look into when investing in these companies are MNAV. So how much Bitcoin per share do they have? And what is the value of their company if they're just now going down the Bitcoin path versus the value of their Bitcoin? Because if it gets too high, then you need to make the decision whether to avoid that or invest in some. Like Semler Scientific at the moment, for many reasons, which I won't go into detail, has an MNAV of less, its market cap is less than its Bitcoin holdings, right? And so, I think that there's some upside to holding. I hold call options on that position, and I think there's some upside into doing so because of that discount to Bitcoin. Whoa, I did not expect the first question to go for this long. When I get onto a topic that I'm interested in, I can just keep talking. I probably didn't do the deep dive justice because that's not a deep dive. That's just me rattling off things that I wanted to say about it. But yeah, throw some comments in. Tell me if I was speaking complete gibberish. Throw what I'm saying into ChatGPT. See what ChatGPT tells you. And comment if you want to know more about these treasury companies and how I'm currently playing them. Let's get on to some easier questions. The next one is, how do we access your options trades? Well, you can't exactly access my options trades. I have been publicizing or have been giving updates on some of the trades that I'm doing. What I'm going to do is when I make trades in that 10K challenge, I'm going to try and create video on me actually. Maybe if I'm not putting on the trade at that time, I'll go back and I'll reenact how I put on that trade, and I'll try and create some video on the nuts and bolts of how to basically put on a call option, what some of the things mean, like Vega, the Greeks like Gamma, Vega, Theta, what a call option is versus a put option. I will try and explain some of these things. I haven't decided whether they'll be separate episodes to the weekly. Maybe again, you can put in the comments whether you'd want to see these basic explanations in the weekly show, or whether you'd want to see separate shows that go into detail about the nuts and bolts of how to put on a trade. Guys, what you got to kind of understand as well is I'm still learning who my audience is. So the more engagement that you can give me, the more that you can help me to learn who you guys are and what you guys need, because I want to make sure that I'm delivering value each and every week, as well as talking about things that I'm extremely passionate about. One other tool that you can use is optionsprofitcalculator.com. So if you basically go into that options profit calculator, and you can, just play around with there's so many different option strategies. There's literally like heaps of option strategies. To get a basic understanding, I'd probably start with just looking at calls and puts, right? Going long or going short a company. I'd start with calls and puts. You can go into the profit calculator, and you can hypothetically pick the options that you would buy, and you could, and then you can calculate what you think the price is going to go to, etc. And this options calculator will give you what those options would be worth, all things being equal, volatility remaining equal. It'll show you what those options would be worth over time, depending on which way the stock moves. So that's one way to play around with learning options. The other thing you can do is if you start an Interactive Brokers account, and I'm not allowed to give recommendations on which accounts to use, or I'm not allowed to recommend trading accounts because that constitutes financial advice. But if I know with Interactive Brokers you can actually paper trade. So you can go in and you can paper trade. You don't actually have to use your own money, and you can put on trades. There's a platform within Interactive Brokers where you can actually have a paper trading account. So you guys can go in there and you can practice if you set up an Interactive Brokers account, right? So, maybe some of the other trading platforms have those paper accounts as well, and that's another way to start to get familiar with putting trades on, without going in there and making mistakes and losing all your capital. Like, there's been times where I've woken up at 3, 4 in the morning and I've accidentally gone short a company instead of going long a company. I've bought puts instead of buying calls. So you can make mistakes in these platforms. So that's a tip that you can do for beginners and those that are just starting out. I haven't found many good options teachers. I try and stay away from options training courses, and I don't think I'll ever do options training courses, because the most important thing with investing, and especially options, is I think investing is highly, highly personal, and you have to try and adopt strategies that aren't necessarily market driven, but that complement you and your psychology as an investor. The best traders that I know, and I've said this many times, are the ones that are strongest up here. And they're the ones that have built systems to deal with this computer up here, right? Because that is the main computer. That is the one that is putting the money and the skin in the game. And so you want to use all the tools like options, etc., to complement this computer of yours, right? So the first step is to work out what type of person, what type of investor, risk taker are you, and then you can go and develop strategies that complement that. Whereas if you go and buy someone's trading program, the minute that things get a little bit hard, you're not going to react. Most likely, you're not going to react like the professional that's using that program is going to react. You're going to react differently. It's all good when things are going easy. I can tell you the probability of outcomes and the way that people are going to react when things are going great. But when things are going bad, people's reactions vary drastically. And you're probably going to do the opposite of the thing that you're supposed to do in that situation. So anyway, that for what it's worth, there's that. Some other platforms, IG, Tasty Trades, which doesn't let you trade Aussie stocks, but that's something that I know a friend uses. Look into that, and paper trading accounts are good as well. So I think with relation to Rich Brokerage, I've used many. I might use Interactive Brokers for the challenge. Which options analytics software do you use? Thinkorswim was good. Yeah, Thinkorswim was good, and it was basically free. It was really good and it was free. And then I think it got swallowed up by, I don't know, like Charles Schwab or one of the brokers over in the US swallowed up Thinkorswim, and now you basically have to have an account with the company who owns Thinkorswim in order to use Thinkorswim. So the options analytics software that I use is Spot Gamma. It's not cheap. It's a couple $100 a month. There's different tiers. This is not a recommendation. I'm just letting you know what I use at this point. Maybe down the track, if I think there's some value in it, I'll try and hook up an affiliate link and I'll send it out to you guys. This was a great question. So I have a question about cash positions. Do you keep a certain cash position ready or just rely on weekly income to provide fresh powder? In my position, I don't have a lot of capital invested yet, so trying to get as much as I can effectively this cycle, then rely on my income to provide fresh powder. In the next 5 years, hopefully to be able to rely on taking profits at the right time to provide more substantial fresh powder. Is this the right thinking in your opinion? Not financial advice. This is a big question, but it's a great question, and so I wanted to answer it here because, again, it comes back to the type of trader you are and how much money you've got. If you don't have any income, you got 100 grand or 200 grand, you don't have any income, that's the money you're living off, then I wouldn't be using a great deal of that money. I'd probably be using, I don't know, me personally, maybe I would take 50 grand out of that 200 grand and I'd say, let's see what we can do with this, right? It's arbitrary. It's not a percentage. It's just an arbitrary number I think you could do something with. You might just take 10 grand, right? You're not going to want to risk that money if that's the farm. You're going to want to start really slow. So the less money that you've got, and if it's your only source of income, you're going to want to start slow. Minimum amount, 10K, 20K, right? And this is not financial advice, it's just what I would do. I would start really slow and start to learn, because there's going to be a lot of losing, right? Like if you're watching this, if you're out there watching this, I want to ask you a question if you're thinking about trading. Are you the type of person that likes taking a lot of pain? If you answered no, then maybe trading and investing is not for you, because this is the one thing that has given me so much freaking pain. But I must, on some level, like taking pain, because I just keep coming back for more. So there's going to be a lot of pain involved. There's going to be a lot of losses, and you're going to want to like losing. So start with a small amount. If you've got a job, you've got a steady income, and you've got a little egg, you've got your home paid off, you've got a little egg. If I had my home paid off, if I had a steady job, but basically this is how I started, right? I had an e-commerce business that I could live off. I bought my houses, my homes, and I thought, you know what, there's some liquid cash there in my account. I want to use it. As I mentioned last week, the amount of cash that I'm playing with and I'm trading with, investing with, is about 30% of my net wealth. It's a significant portion of my net wealth. So, I don't just want to lose it. That's significant, right? Then the answer varies, right? Then the answer varies because it depends on, well, what is your strategy? How bullish are you? Where are we in the cycle? Are we risk off? Are we risk on, right? Like, to give you an example, my cash position, let's call it $100,000, right? Or $1 million, or whatever you want to call it. Let's just use even numbers. My cash position varies anywhere from 60, 70%. Like back in Feb, after the big blow off after the inauguration, I took my cash position to 70%. So I was out of most things except basically Bitcoin, right? I took my cash position to like 70%. Last week, I was like scrambling to sell things because my cash position was at like $67, right? It was at like zero. And so my cash position will change depending on the positions that I have on and how bullish I am on the market, right? And so another example is I've taken a large portion of money from my mum's self-managed super fund, and I'm trading that at the moment. I've made my initial investments, and 60% of those investments are in like safe yielding assets. The other 30% is in, and that's including the cash position, right? So 30% in yielding, and there's 30% in riskier stocks. I'm still sitting on like 45% cash there, right? Because there's not going to be any more money coming in to that account ever. What I have is what I have. If I lose it, I have no more. It's her super money. She has no more money to be allocating to that pile. So I need to be more cautious about my cash position. I need to keep it higher because when opportunity comes, I want to be able to allocate. It also means that with the other 50% or other 55% that I've currently invested, I need to be taking profits at certain times, right? And so there are positions that are in there that are hodl positions, but there's also positions within that if that gets to a certain point, I will take profits. So if there's no more cash coming into that account, then you're probably going to want to keep your cash position higher. With my trading account, there will be times when my business will give me distributions, or there will be times when I'll be able to put more cash in. But I still like to have a decent amount of cash. I think my cash position at the moment is roughly about 15%, right? And so I'll vary from 15 to 25% cash, because the most important thing is when opportunities come, you do not want to be high and dry. You want to be able to put capital in. You actually welcome corrections when you have capital on the sidelines, right? And you also don't always want to be in 90%. I don't always want to be in 90% cash, because if the market is running and going up without me, then I don't want to be getting FOMO and then chasing stocks, right? So step one is work out what kind of investor you are. Step two is work out which of those piles is most aligned to my pile. Step three is then work out, okay, of that pile that I'm investing, how much is going to be in high risk, how much is going to be in yielding, how much is going to be in low risk, etc. Now, make sure you actually know what high risk is and what low risk is, because oftentimes people think they are spreading their risk, but they're not, and the correlation in their portfolio is basically one, that when things sell off, everything sells off, and make sure that you know what your plan is, and that you have market signals that tell you when to be heavier and tell you when to be lighter. Well, most people do the opposite. Most people go heavier with no cash when the market is running. Really, when you want to be heaviest is when the market is like tanking, like in April, when everyone's like, oh, there's going to be a recession, there's blood on the streets, this, that, whatever, and everyone's like in cash. Well, it's like, that's the time you want to start putting your cash to work, in my opinion. That's the time that I want to start putting it. Now that the market is going crazy, I kind of want to be having a little bit more cash, right? Because yeah, it could keep going crazy, but what's the risk of having cash, right? At least if it stops going crazy, if something happens, war, this, that, whatever, that I have money to play with. Which takes me to my next question. So someone commented last week, I think I mentioned Woodside Energy was my biggest position. And they basically said, Woodside Energy Group, really? It was $7.26 at IPO in 1999, and today it's $25.21. Only a 3x in 25 years. The M2 Australian compounded increase in the same period was 9.8%. Better to sit on your hands and stay in AUD cash. Yes, okay. So here's an important point. If the lens that you are looking at is what has done best over time from 1999 until now, well, maybe it's Bitcoin, but that started in 2008, right? But if I had a mandate and I had to invest from 1999, what would I invested in then, right? Time preference is super important. If in fairness to the person who made that comment or question, or basically made that statement, his lens, the lens that he's currently providing is what has been the best compounder of capital over time. And then you need to you can say, the best compounder of capital over time since 2008 is Bitcoin. But what about for 2,000 years? Well, then it's gold. Or what about in the last 3 months? Well, then it's Metaplanet. Or what about in the last week? Well, then it's something else, right? So time frame matters. Time frame is super important. You can't really look at someone's investment portfolio or percentages or allocations and mimic them, because the perception, the lens that I'm applying to my portfolio is going to be different, I guarantee you, to the next person, to anyone else who's looking at it. To give you some background, to give you some reference, the money that I used to buy Woodside came from my offset account. So the money that I used was money that I didn't want to invest in the markets, but I wanted to have there accessible. I was offsetting around about 6% interest. Not too good. I had a choice. I could go out and I could buy Bitcoin or MicroStrategy or whatever, and there could be a mean of risk that over the next 6 months that went down 50%, and my little savings buffer would have gone down 50%. I didn't want to take that risk. So when I saw oil go from like $80 down to 65 to 65 to 60 to 55, and then when it sold off dramatically around the Liberation Day news, Woodside went from $38 down to $18. After COVID, so in 2020 when COVID hit, it bottomed at around $13, $14, $15. So it was like 25 or 30% off its COVID bottom when oil prices went negative. As Woodside came down from $38, when it got to 23, I started buying it slowly. And from 23 all the way down to the capitulation at 18, when it went down like 15% in 2 days, I was building my position. So the reason that my position is so large is because I was building it from $23 all the way down to $18. The reason it became my largest position, it wasn't my largest position, the reason it became my largest position is because now, with everything that's happening in Iran and Israel-Irani war, oil prices are spiking, gas prices are spiking, and Woodside has gone from $18 to $26, 27 it reached yesterday. So my position has appreciated 30% in a couple of months, since April. So since April, it's actually outperformed Bitcoin, right? So that Woodside position has outperformed Bitcoin in the last 3 months. So time frame matters. Do I think it is going to outperform Bitcoin between now and 2099? No, I don't. All right, just so we're clear, I don't. But for my time preference, for my investment preference, for my portfolio preference, that was the perfect trade back in April. And for me, I saw it as a safe trade because the technicals that I see on a chart, I think that it can easily get back, and this is my opinion only, I think it can easily get back to $38 at some stage. And I said last week, over the next 2 to 3 years, right? I thought oil might double. Last week I actually said, I think oil might double over the next 2 to 3 years. And if so, then I think maybe my position will double, right? That's just my guess, one guy on the internet thinking maybe this is something that could happen. It's already at $27, right? You bought it at 18 at its lows, 36 it's doubled, right? It might play out sooner, right? And at that point, then maybe I don't hold it for 2-3 years, right? Then maybe I do something different. Maybe I sell it, maybe I keep some. It also pays an 8% dividend, right? So it's really important because there's a lot of noise out there and there's a lot of people that are going all in on things, and that's great. If that's the type of investor you want to be, you want to go all in on Bitcoin or all in on silver or all in on Tesla or whatever, fine. And you got to keep in mind that the lens that you're going to be operating under at all times is going to be this one thing versus everything else. And you're only going to operate under that lens. You're not going to see the market in 3D. You're only going to see it in one dimension. So, I'm taking a significant part of my net wealth, 30%, and I don't want to be all in on one thing with that, right? I've said it a couple of times, I think 10% for me personally is a nice place to have Bitcoin exposure. Yeah, I don't want to be all in, right? Because, it doesn't matter, the narratives, guys. It doesn't matter if you listen to Michael Saylor or you listen to Preston Pish or Jack Mollers or whoever you listen to, Lynn Alden, right? Like they're often trying to educate, but they're also coming from their own perspective and own point of view. And you don't know their financial position, you don't know their risk tolerance. So it is important to assess the market with all those things in mind. If I had taken a similar strategy back in 2021, I might not have lost $1 million in a day, all right, in 2 days, because I went all in on Luna and I didn't hedge my bets. I didn't have my portfolio split. My time frame was Luna's going to be the thing that outperforms this cycle, and I wasn't thinking for the long term. So anyway, I hope I did that comment justice. Keep those conversation points coming in the comments. I enjoy receiving them because it's a great conversation. It's a great thing to talk about. All right, we are running much longer than I thought we would. So let's just see what else was the most popular. As a high net worth investor, what are you doing to protect your assets from the wealth grab that is clearly underway? Well, I think if you go back and you watch the episode 1, 2, 3, 4, if you watch all the episodes, I think you get a clear picture of what I'm doing in relation to the wealth grab that is underway. The biggest issue that I think, other than maybe a lack of birth rates, it's the biggest issue that I think faces us is our money, because it's our time and energy in abstract form, and it literally is getting robbed from us. We wouldn't let someone steal all our money if it was piled in the table in front of us. We'd fight to keep it, but metaphorically, that's what's happening. People are taking our money from us. So yeah, go back and look. It's the purpose of this channel, right? Purpose of this channel is what I'm doing to not evade, but to try and shield myself from that grab. Can you do a video on moving money offshore, changing residency, or even second citizenship? I can't, because I haven't really looked into that yet. It's something that, depending on the success of my investing, is something that I'm considering. There are a bunch of podcasts that we've done on unemployable, where Adam Hudson talks about his move to Cyprus. So cheeky shout out for the Unemployable podcast. Go and give that a follow if you don't already. Unemployable Media on YouTube, and there's a couple of episodes there in our Friday sessions where Adam talks about his move to Cyprus and the tax policy and how he did that in a completely above board way. There's many questions on wealth transfer, the importance of demographics, GDP, robots. How are robots going to affect jobs? How are robots going to affect GDP? How are robots going to affect our standard of living? How are robots going to affect taxes? Is there going to be universal basic income? I think I need to devote an episode on that. Otherwise, I'll be here talking for another 30 minutes. In short, my short thoughts are this. I think that robots will be in greater number than humans. I think they will increase GDP and productivity. I think that the way we measure GDP might change. I think that robots inevitably will need to be taxed. If they're creating productivity and replacing jobs, they'll need to be taxed. I think a large portion of that money will go to creating something like universal basic income or supporting people whose jobs have been displaced? Do I think that it's going to be the end of civilization? Do I think that we're all going to be sitting at home doing nothing? Not at all. Not at all. I think that maybe we're in the early stages of the 9 to 5 being dead. I think maybe robots and AI are going to allow us to go back to that self-employed, like back 150 years ago, everyone was self-employed. There was no 9 to 5. We didn't work for corporations. I've done a video on this in the past, right? It was Henry Ford and his motor car company who basically ushered in the 9 to 5 because he needed a system to train people to come and work in his factories and manufacturing plants to build cars, right? So I believe that technology is probably going to destroy that 9 to 5. That's you know, a lot of people have spoken about disrupting education, but no one's kind of landed on how. That's because anything that you do is going to be disrupted by AI and robotics, right? We're going to have each person is going to have access to a 24/7 tutor. How is anyone going to be able to compete with that? And so what that's going to create is smarter and more intelligent humans that are going to come up with different ideas to become more entrepreneurial. And, you know, I honestly believe that AI is going to usher in the first $1 billion one-person company. And I think it's going to be much easier to create jobs and professions where you might be servicing 1, 2, 3, or 4 people because of AI. And that wasn't there in the past. So I think we're all going to become a lot more responsible for our own income. You know, there wasn't dog washers and massage therapists 100 years ago. Now there is, right? Humans, our biggest gift is our creativity. Our biggest gift is the evolution of our brain. That is what separates us from all other wild animals, from all other animals. It's our brain. And so creativity being the cornerstone of what it means to be a human, I think we're going to come up with the most amazing and creative ways to create industry. And I honestly think that the world is going to be, I'm betting on that AI creates a better world. We are going to need guardrails at some point in time to ensure that it doesn't get too crazy. But I think, you know, once we accept it, I think it should create a better world if we learn to use it and coexist with it. But that's yet to be seen. But any conversation that discusses macro without discussing AI, and any conversation that discusses AI without discussing macro isn't doing it right, because these things are so closely intertwined. We're going through the biggest shift. You know, this is potentially as big as electricity was, and maybe even greater. Let's see. So guys, on that note, if you found this information useful, this was a bit of a ad lib, bit of a go anywhere episode. But if you found this episode useful, if you found any of the information useful, if you found any information on previous pods useful, please give us a like and a subscribe. And if you've got family or friends that are out there and they've been complaining about the way the world is and the kind of world that we're moving into, maybe share this podcast with them, because I hope to kind of bring the average everyday person working a 9 to 5 in on what I think the most important topics of the future are, in order to become indestructible, in order to become, not even that, in order to succeed and thrive in the new world moving forward. So that's it, guys. We'll see you next week. Thanks for your time.